All right, traders, we're back with another episode. So today we're talking about the global financial crisis that might be brewing. Call it the global financial crisis 2.0. There's a couple of important things that have happened over the last few weeks. We had a big hurricane here in Florida. We had some other news come out. We're going to talk about all that today. Plus, we talk about managing trades and really staying profitable during uncertain times. So enjoy the episode. What's up, everybody? Welcome back to the podcast. We appreciate you listening in, watching, wherever you're coming in from. James and I are back after a crazy week last week, at least for me, bro, with that hurricane coming towards Florida. It kind of threw me for a loop. I had a good trade, though. Remember that S&P 500 trade? That was a good trade. But other than that, it was like a really crazy week last week. And now with today's episode, I wanted to kind of catch up with you, get some insight from you on what you think is going on in the bigger picture of the world right now. Because last week, I don't know if you saw this, there was a tweet from FX hedgers and all like the news stuff. And it said, it was from Australia. That was the source, was someone in Australia, like some news there. They were the source that said a major global bank is on the verge of collapse. So that kind of got the pot stirred up a little bit last week, where people were like, well, what bank is it? Like, come on, you got to tell us more information than that. Okay. But now this morning, we're starting the new month. It seems like, Bloomberg an hour ago is posting that it's Credit Suisse. Credit Suisse is the bank, and potentially Deutsche Bank as well, that are in some hot water. So I wanted to talk to you about that and maybe give the people that are listening some insight as to how we will continue to trade while this happens. Because what if this is the next global financial crisis, the next 2008? And I want to know too, from your perspective, like I have a lot of questions, about the repercussions of this. So let's get into it, bro. Let's start first. How was your week last week? While I was away, I know you and Tom were holding it down in the Black Shirt Club and in the main chat. So how was your week last week?
Yeah, last week was very interesting to start the week. We had a 600 pip gap down on a lot of the major pairs, such as GBP USD, GBP JPY, Euro USD.
What was the news that pushed that down? Was that just random flash crash?
Just random flash crash. Market open on. It was during the Asian session on, Monday would have been early hours of Monday for me, Sunday evening for you. So it was just weird to start the week. But I had I remember, I think you on Tuesday or so, you had that S&P 500 move to the upside. I had NASDAQ. I just had one trade last week, NASDAQ short to the downside. On the A2, the new system that you and Tom are working on with back testing and everything. So started off pretty hectically, but I think during times like this, just try and keep it your trading system simple is the best thing you can do. Is just be very simple in your trading system. You don't need to overcomplicate things with all the financial and fundamentals going on.
No, that's definitely a good piece of advice, because I feel like I've had a couple of trading days in the past where I do get caught up looking at too much fundamental stuff, and it does then kind of distract you from the technicals, the clean stuff that can be happening. But also when there's a lot of big events going on, like these bigger news events, I think it increases. I'm curious to know what you think, but I think it increases people's FOMO. It makes people feel like they're missing more moves than they normally would, because there's such big moves, whether it's GU or, all the major indices just took out yearly lows. Like we are now in no way, shape, or form in a bull market. It is full bear market right now. So that question of, is the bottom in? No, it's clearly not, right? And we kind of knew that even going back a month ago. We were talking about it on the show here, that graph that showed everybody seeing the SPY hit the same moving average that it did in 2008 before it fell 50%. So we're seeing so many things parallel to what happened in 2008, which was the great financial crisis. So this is one of the main questions I had for you, now that we're getting into it a little bit here. What happened in South Africa in 2008 when Lehman Brothers here in America failed? What was it like in South Africa? Do you know? I know you were young, but do you remember, like, what's your dad say?
So my dad, for those that are listening, my dad's a CA, a chartered accountant with his own practice. So in 2008, I would have been 10 years old.
Right.
10 years old, I would have been.
Right.
So I wasn't too clued up on that type of thing. I can't say I do remember much as well, but I do know that my dad was with everyone, not being able to pay mortgages and that in South Africa was panicking a bit. That's all I can remember from that
So it
time.
was still there, but like there were still people that could not pay for their housing because people were
correct. Because obviously
over-leveraged.
a lot of people in South Africa do business with companies in America.
Right.
And my dad was doing their finances and they couldn't pay suppliers because they weren't getting paid and so forth.
It's interesting how it ripples. You know what I'm saying? Like when you are, if you are America and you are the dollar and you're the central currency of everything in the world at that time, which it still is, it's just maybe not as strong. But in 2008, China was not a player in the world. It was USA. Yeah. So everyone's doing business with you. So if something happens with you, it's a ripple effect. That's why they called it a global financial crisis, because it's interesting that even in South Africa, they were having issues making payments. But that makes sense because that's probably, other than the Great Depression in the 1900s, early 1900s, that's probably the next big important event during the last 200 years of finance,
Correct. Well, I do remember this history was one of my subjects in school. And I do remember this. My teacher always used to say, we learned this in history, but when America coughs, everyone gets the cold.
That's very true.
So it's like, but it goes both ways. When America is having problems and troubles, everyone's could have troubles because it's a ripple effect. But when it's like the roaring 20s and that, everyone's doing well. So it's kind of like it's a mirror
double-edged sword. Yep.
Yeah.
So on the day trading side of things, then, there was tons of people that got smoked in their 401ks. There were tons of people that lost their house. Tons of people got destroyed during that. But there were also, I'm sure, a small percentage of people. I mean, think of the show Billions. Bobby Axelrod. Did you ever watch Billions?
I have watched Billions, yes.
Bobby got famous.
Speaking about on Twitter this weekend.
Yeah, Bobby, who's the main character, he got famous in his hedge fund because he was able to short airline stocks. I think specifically was he was shorting stocks during 9/11. He was in the office pounding trades while people are looking up at the trade towers thinking, what is going on? Are we being attacked? So there was definitely a small percentage of people that capitalized on 9/11, capitalized on the 2008 crisis. There's always people in crisis that have their finger on the trigger and they're trying to make money. So I'm wondering now, like, as we go through this time, I don't want to call it turmoil because it's not like we're all panicking, but if Credit Suisse and Deutsche Bank go under, that would cause major panic. So as that happens for us as day traders, I feel like it sets us up for success, bro, because we didn't catch the GBP USD move to the downside last week, but look at GBP NZD 500 pip ADR right now, bro. Euro GBP, the ADR is huge. So now this is just setting us up for more movement, more volatile movement, that when our signals do present, I would assume we're going to be able to catch bigger rips, because it's not like you're seeing the strategies we trade not work. They're working to a higher extent. But I think the bigger thing goes back to what I said before. You've got to not feel FOMO. You can't see the GU move and then chase it and give back losses, give back gains, whatever, give back money to then. You have to be able to wait for that good signal that aligns with volatility and with your system, and then use the volatility to your favor,
Yeah, I think just a quick one before I ask you a question about the fundamentals and that. But I think a lot of people look at a move or a chart that they missed out and are like, oh, that's such a clean, easy move. I would have caught that GBP 300 pip move out of the 600 pips to the downside. But I'm like, dude, if you're on the desk, how do you know that's going to happen? You don't. Right. And then they feel that FOMO, and then they come back the next day and like, oh, they're looking for that next 300 pip move, but it's not like that every day, right? So I
definitely
think
not.
Just take you got to take your medicine sometimes and just be on during your hours and stay focused on your trading system. You can't always predict what will going to happen because you don't know with those flash crashes and that.
It's very true.
Just a question that I wanted to ask with regards to because I've seen on Twitter and stuff like that with regards to if Credit Suisse or Deutsche Bank are under. What do people stop believing in the banking system? Because those are two. What's the thing there? Because just a quick one is that people are sometimes like on Twitter, you always see these arguments and they're like, I wouldn't put $100,000 in a personal trading account because even if they're regulated, because I'm not too sure. And I'm like, dude, you probably have that in a bank, but the bank can just tune cheers whenever they want to. So it's kind of like the same thing in my opinion. Like,
I think people have the opportunity to not trust banks now because of cryptocurrency. Really, that's what you made me think of first when you said that. So like in 2008, nobody knew what Bitcoin was. That was when that shit, like the guy bought pizza with Bitcoin. That was like, I feel like when that happened, you know what I mean? Like nobody was using Bitcoin except nerds, people on the computer and the dark web and all that shit, right? So what was your alternative in 2008? Okay, the banks are going under. Lehman Brothers, which is one of the biggest banks in the world, collapses. It's being AIG goes and they have to be acquired and all this other. You get scared, but where do you go? You probably just keep your money in cash in your house because you're scared, you know? Now you have another option. Now you can diversify into cryptocurrency because if you're going to make the argument that you put your money in a trading account and it's risky, you put your money in a bank, it's risky. If you buy gold with a brokerage or you buy silver with a brokerage, it's risky. Just like buying crypto is risky. But the thing with crypto is you can get the crypto off the exchange, put it into a cold storage wallet, and then you actually have it. Like when I buy gold and silver ETFs, I don't own that gold and silver. But when I buy gold and silver and I keep it in my house or I store it somewhere, then I actually have it.
Yeah,
exactly. So I think crypto gives people that path, that avenue that they can follow if they want to say, you know what, I'm done with the banking system. I'm going to take my chances on Bitcoin. The problem with that, though, it's like it's a pain either way. Bitcoin's going to go up and down 6% in a day, right? And your money is going to lose and gain value like crazy, or you just put it with the bank and you run the risk of them going under like this. So it's a double, like again, another double-edged sword. Either way, you're getting poked, you know?
Yeah, I actually read something quite,
and I know how much you like getting poked.
So,
what were you gonna say? You read something?
Yeah, I read something in the interesting the other day. So with one of the banks that I bank with here in South Africa, they allow to however much money you got in the bank account with them, they're allowed to loan out. I think it was 5 times that amount. So basically, let's say you have, for example, $10,000 in the bank account with them, they're allowed to loan out $50,000. But they actually don't have $50,000. They only got $10,000. And that's where the problem comes in, where they go under because now they need to pay. People sometimes want their money out and all, you know how it is.
It's called fractional reserve banking. I don't know why they're allowed to do it. In America, they can do it 10 or 100x. You give them $100, they can 100x it and loan it out. They can just make it more. They just make
money out of thin air.
That is the problem. That is why the dollar has lost so much value, because they've made it so easily accessible. They've made too much of it. Anything that has true value is scarce. You know what I'm saying? And when you have something that is unlimited, what's the value on it? If it's unlimited, what is really only what we agree that it is. Because at the end of the day, if it's unlimited, it's basically valueless. It's free, like air, you know? But then this is the difference between intrinsic value and I forget what the other type of value is called. Someone in the comments is going to tell me. There's intrinsic value and then I think realized value or whatever, because air is intrinsically still, like, because it's unlimited,
valuable.
It's still valuable. It's not valuable in that sense, but we need it to live. So in another form of value, it is still very needed. It's necessary. So it has different forms of value. But I think Bitcoin and cryptocurrency have enough value where you can get it, you can store it, you can keep it away from other people. You can sell it. You can use it to transact more now than ever before. It has a lot of value in its own. But like I said, the problem with it is if you go to anybody that's over 40 years old, especially, and you tell them, hey, we're going to put the money in Bitcoin, they're like, nah, I'm not doing that. Does your dad have any Bitcoin?
Not a chance.
Not a chance, bro. Me neither. No way.
So my family friend of mine, I think I could have said this on the last podcast on the managing market volatility. But a family friend asked me about, they lost like $80,000 because I don't know if what asset what was on was I think it could have been on a stock that they just carried on holding. It dropped on earnings and then they just carried on holding onto it until it was basically worth, like, they had 100,000 invested in it dollars, and then it went down to 20,000. So they just decided to take it out, take their loss, sell their shares. But it's quite tough. So that's why I think also people need to be educated before they just put their money in Bitcoin, because as you said, Bitcoin can move 8-10% on a day, and that's pretty normal.
Exactly.
And I think also, as you say, diversifying. Maybe if you, let's say you got $100,000 to invest, maybe put 10 or 15,000 in Bitcoin, put another bit in a trading account, put another bit in maybe put in a bank account and open up and for some property investments, stuff
take
like
it
that.
You could take it another step and say, like, I'm actually trying to figure out how to get my Italian passport because my mom was born in Italy. My grandparents are both from Italy. I'm trying to figure out how to get a European Union passport so I can open up a bank account potentially in another country. Like, it'd be great if I could have an account with some
euros.
In euros. Exactly.
Yeah.
And I mean, hate to give him credit, but that is Andrew Tate right there. I've always kind of thought about that, about making enough money I'm sure rich people have done that. He's not the first one, but now he's out there talking about it. He's like, instead of trying to go live off the grid and live in the woods and use acorns for currency, why not have every currency and have access to everything? That is the way to live off the grid in a world that is always on the grid. There is no more off the grid, No
offense. Yeah, you're not going to get off the grid in this modern technology world, bro.
They're going to find you. They're going to fucking send a drone over your house and they're going to find, boom, you're back on the grid. So it's not even worth it. It's better to do what he's doing, because he was on a podcast saying how they attacked his payment processors. Like, that would be like Stripe and PayPal. They shut him down. But he goes, for example, I'm not saying this is true, but he goes, for example, say that I had a bank account in Singapore. Do you think the Singapore authorities care about what Facebook is censoring? No. Yeah. On the other side of the world, their problems are different. Their focuses are different. Their cultural beliefs. They're not focused on censoring somebody for being misogynistic or whatever they accuse him of. You know what I'm saying?
I don't care about that.
They don't care. They don't even know. They don't even know.
I don't even know him.
They know him as a businessman that was able to put his money with them, that they then take his money and they loan it out. So who do they care? They don't care.
Yeah.
They don't care. This is why UBS and Deutsche Bank in the past, two big banks, have been accused of laundering money for the cartels. Exactly,
they
bro.
Don't care.
They don't care, bro. They don't care.
Money.
They don't want it. I mean, there was a whole case about the banks working with Jeffrey Epstein. Jeffrey got accused of being a sex offender in 2005 or 2008, whatever it was. After that, he's still doing business with these banks. And then the banks lied and acted like they didn't know that he was a accused or a convicted felon. Because if you're a convicted felon, some of the banks don't do business with you or whatever it is, but the banks turn a blind eye. Why? Because he's giving them $20 million every month and they're loaning that out to $100 million and it's increasing their balance sheet. So it's very easy to see that these banks, bro, to our point of today's episode, they don't care about the global financial system integrity like they say they do. No, they care about getting more money and loaning it out to charge more interest and make more money. That's
to make more money. Yeah,
that's it.
That Lil Wayne had this song. I don't know what had the song in lyrics in the song go, "Money talks, bullshit walks." So
that's what I'm saying, bro.
Matter. Yeah,
that's what I'm saying.
They want your money, bro, and exactly. And on the other side of that's very smart. Like putting your money in multiple countries in different currencies is probably a smart thing to do. That's diversifying as well. I mean, that's quite a smart way.
Because then we can sit here and speculate all day about which country is going to be top dog, but we don't know. Yeah, so why? That's like you have 4 C setups and you try to trade one of them. No, you trade them all and hope that even though they're low probability, enough of them win that you make money. So you've got to get into all these different systems in case one of them goes to shit. What if America goes to shit? As someone who is trying to become part of a top percentage of earners, I would be foolish to restrict myself to just one banking system, because if it collapses, if there's a problem, I'm screwed. All the work, all the hard work out the fucking window. That doesn't make any sense. It
doesn't.
Even if you're like, I hate the people that are like, no, America, got to believe in America. I do believe in America. I'm living here. I'm not leaving, but I also understand that there's bigger pieces at play here. And I'm a pawn of a pawn of a pawn. I'm so small to them. So like these pieces are going to move regardless of how I move, but I'd like to be that little fish that stays underneath the biggest shark. No one notices me, but I'm eating on all those leftovers, bro. You know what? I don't have to even work for it. You know what I mean?
Yeah.
I'm incognito. That's the way I think I'm trying to move as I get older,
Yeah, very true. Very true. Yeah.
And I feel like too, people, you never think about what will happen on a rainy day until it's actually raining. We like to think that we're prepared, but like, think about the people in Florida that got destroyed by this hurricane. Like you look at that, the pictures and the videos, like people are still stuck on some of these islands for 4 or 5 days.
I saw some Lamborghinis and Rolls Royces getting washed away on his. I don't know if it's true or not, but that's what I saw.
No,
And
it's definitely true, bro, because
yeah,
where the hurricane hit is a very wealthy area, very
yeah,
wealthy.
Naples. Yeah,
Naples, Sanibel, Fort Myers.
yeah,
There's a lot of wealthy communities down
yes.
there. But
It's
the
pretty
worst
hectic.
part about that is those people who left their cars, a lot of the cars have been looted. People breaking into I saw a
Oh,
crowbar
really?
in the back of a Bentley trying to break open
Jeez.
the trunk. Yeah. People are trying to loot, which is dangerous in Florida because everybody's got a gun. So if you do that, you're going to get shot. So I would not recommend that to anybody.
Yeah.
But my point of bringing up the hurricane again is like those people have insurance. Those people are going to hopefully be okay. And there's going to be insurance companies that probably go out of business because of all
Oh,
the money
yeah.
they have to pay out.
Jeez. Yeah.
But the guys who have those houses that live on the beach like that, they're prepared, bro. They were not the people who are really wealthy. They didn't try to ride it out. They said, I'm getting the fuck out of here. I'm diversified. I'm out. If this my one beach house is ruined, insurance,
I got
making move.
5
I got
more.
3 other houses.
Yeah.
I got other stuff. I'm diversified. I'm out. I don't, yes, it's sad, but I'm diversified. I'm safe. So like
You're gonna get paid out. Yeah.
the
Yeah.
smart people
Yeah.
set themselves up because
Yeah.
they knew the risk of living on the beach in Florida. Hurricanes happen. So they need to
Yeah.
plan. They need to know how to get out. And that's why we do these episodes, because I hope that we share some information to people that can, maybe nobody heard about this thing with Credit Suisse. Maybe we're getting their brain turning a little bit to be thinking, am I diversified enough? Am I even trying to be? You know, a lot of people probably are like, man, I just want 100 grand, right? I just want 100 grand. That's what some people want. But like, you got to think bigger than that. You got to think more long-term than that. And you've got to think, well, what if something happens to my money that I've worked really hard for? Am I set up to keep myself safe? And that's why I'm super interested in seeing what happens, because now, even if you look at like some of these charts I'm seeing on Twitter this morning, the stock of Deutsche Bank and the stock of Credit Suisse is lower than where it was in 2008 already. Jeez. So that's not a great sign, you know. And overall, what I guess the bigger point of this is, because a lot of our audience is day traders and swing traders, like people made money in the 2008 crash. Michael Burry, like a lot of people cashed in. A lot of people this year, I have friends. Do you know what a reverse ETF is? Have you ever heard of that?
Well, I've never heard of it, but I'm assuming that you just take the opposite. It's the reverse of it. It's
exactly. So you can, it's basically like in options. If you think of options is going to go down, you buy a call or you sell the call, whatever it would be. I'm not an options trader. So calls go against price going lower, right? They go for price going lower. Puts go when price go up. So basically buying a reverse ETF is like the ETF. If the stock goes up, you make money. The reverse ETF, if you buy it and the fund goes down, you make money as it goes down. So there's been a lot of people in 2022 buying reverse ETFs, and they've crushed it on the way down. Crushed it. Well, so I think
Kathy Woods one, you'd be banking.
You'd be banking, bro. But these are strategies that are not common to people, you know. And again, exactly, a lot of what we talk about is not conventional, because what we're doing is a business that is not super conventional. We don't work for somebody else, right? So it's like we have to continue to be unconventional, right? Unique, original. You have to come up with new ideas. These reverse ETFs are a great idea. When you think things are going to go down, you start buying those. It's easy. You could do it at Vanguard. You can do it at Fidelity. You can do it so easy. So I think it's understanding the strategies like that, and then the tools being like, for us right now as day traders with the funding companies, we have the ability to just short the fuck out of everything. Bitcoin, US 500, all of it, bro. You go to some of these stock guys, they have a hard time shorting certain things. We don't. So you've got to take advantage, I think, and not be afraid of like, oh, global financial crisis again. What are we going to do? No, this is going to make us more money than ever before, because we're ready. We're set up. And then we're going to move that money into the right places, the right banks, the right assets, because we're talking about this and doing the right research. So it's a lot for some people, but I think this is good. Like I'm telling you, bro, the next 10 years, it's like turning a chapter. People are going to get left behind that are not adapting and taking in new information. They're going to be old school people that are still using whatever the traditional system is. Just like how when iPhones came out, people still used flip phones for a long time. But now nobody's got a flip phone. Nobody. It takes a little bit of time, but I think we're going through a big, big transformation. And being day traders, we're set up to kill it. That's all I feel like. Look at the numbers. You and me are both having a great year. Tom, a lot of our guys are having great, really, really great years. And I think that's because we are always trying to prepare and always trying to learn new information. I think that's what makes us really I don't want to say talented, because that's just putting in the work to learn. And so I think that makes us determined. When we are determined, we take in new information, we are unbiased as much as we can with it, and then we use it for good or for bad. And that, like, I was talking to somebody last week about my trading statistics over the last couple of months. And I said to him, like, I feel like it's because I'm so determined to hit my goals that I'm like tunnel vision focused, but I consume so much information that helps me make really good decisions while I'm in the tunnel. You know what I'm saying? So I'm listening to everything and hearing everything, but I'm very focused on the direction I want to go.
Yes,
but I use that information to kind of go faster,
That's very well said. Yeah. No, for sure.
All right, bro. So now we're going into October.
Yeah. Last quarter.
Last quarter. Yeah. But this is a big month too. I saw a lot of tweets yesterday, people saying October and September are like the worst months for the stock market. There's famous crashes in October and September. So, I mean, for us, bro, I'm really looking forward to slamming the short, because I don't care. Like, if you look at some of these charts, like SPY, US 500, same thing, like it's at its pre-COVID high. So think about where the stock market was when Trump was in office, kind of. Trump's in office. Stock market's reaching record highs, COVID hits, and it crashes. We're back to that high. We are not at the COVID lows yet. We're at the COVID highs, which would mean that whole bull run from 2020 and 2021 has now been erased. And it has. If you look at the chart, that's where we're at. But now, how much lower do we go? Well, this is where it gets fun, because there's a lot of buyers here. There's a lot of people using the COVID high and the COVID low.
Yeah.
So now where do we go from here? I don't like calling the bottom. Do you?
No, I that's the thing about day traders. We just come in each day and trade what the setup's saying, what the charts are telling us. I think that's the thing about what I love about trading. Each day is unique. It's different. It's very difficult to forecast. Pick one side of the market. This is what Anthony Crudeli, I learned from him on our podcast. Pick one side of the market and trade in that direction. Don't try to call a bottom or a top.
Yep. How's he doing through the hurricane? Do you know?
Yeah, I know he's from Naples. I haven't heard. I have seen that he has.
Guarantee you he fucking left, bro. Guarantee you he did not stay.
Yeah. I didn't see any hectic tweets from him or anything like that. So
he never tweets personal stuff though. So I don't even think you would know if his house got destroyed. He wouldn't even say anything.
Yeah.
But it's this time of year, it's like October and September, we got hurricanes, we got market issues. It's just the time of year. And then it'll slow down into the holiday season, which does remind me of something. We should let everybody know our ASFX TV streams are going to continue all the way through till the end of the year. We did make a change on the schedule with Jerome. His stream now is going to be an hour earlier because they changed time zones. So everybody that's a member of ASFX TV, just keep an eye out for that. We do post the new schedule all over the place, so you should see it by now. But if you're not a member, ASFX TV is our streaming service. It's like Netflix for traders, right? That's what I've been telling everybody, James, and that seems to resonate with people. Probably so you can exactly, but it's actually like better than Netflix, because think about it. Like Netflix, nothing is live. They don't have live anything. We have the recordings and we have the lives. So it's actually like we're better than Netflix. Netflix is stupid. They should be doing live sports. They should be doing video games. They don't do anything, bro, except these. They're getting outdated. Someone's going to come and beat them out eventually one day, bro.
No wonder they dropped.
They're earning shit, right, bro? And that's also because they didn't set it up they built that business where people could share accounts. So what do you expect?
Well, now they want to block it now. They want to block that now.
Yeah. Good luck. People are going to figure out a way around that, bro. Of course. So, but I think for those of you that don't know, ASFX TV is a very valuable resource if you're looking to see how James and I, along with Tom and Jerome, how we actively are trading right now. So while markets are crazy, there's all this news. Like James said, we're kind of still coming in and just doing our technical thing. We're using the fundamentals a little bit, paying attention to it, but we're still grinding away, chipping at these gains. I took a trade this morning, hit about 3R, 2.5R, took 75% of the trade, got stopped in profit. Boom, another win. Boom. People ask me all the time, bro, how do you have an 80%, 78% win rate? I tell them, because once my trades move into profit, I don't give it back. Ever. And that has made such a big difference for me. But also, you and me both, we never, ever catch all of the move. Ever. Never. It's impossible. Yeah. So stacking wins, tight stops, tight management, taking profit quick. That's the name of the game right now. But not everybody wants to adapt to that. And that's why a lot of people have stopped trading. There's been less and less people trading this year,
For sure. Yeah.
All right, bro. This has been good. I hope our listeners enjoyed. So if you are here all the way through the episode, we appreciate you very much. Make sure you subscribe if you're listening on Spotify or if you're listening on iTunes. Try to write us a review. If you hate it, tell us in the reviews. If you love it, tell us in the reviews. We also post these on YouTube. If you'd like to see the video, you can watch on YouTube. And if you guys have any questions about trading in general, please go to my website, asfx.biz. You can book a free call with me. I'm more than happy to talk to you about the Black Shirt Club, ASFX TV, our courses, anything I can do to help you. I have a couple of people that book and they just want to talk about trading. I'm more than happy to do that too. So take advantage, because soon my calendar is going to be so full that I'm going to have to hire somebody to help me do these calls. And then you're not going to be able to chat with me. So if you want to book that, go to my website, book the free call, and I'm more than happy to hop on. But James, thank you, bro. It's always a good hour or so chatting with you. And I think that everybody enjoys I'm hoping everybody enjoys the back and forth, the good conversation here. And hopefully we shared some new ideas with people, which will help them make more money and make better decisions.
For sure. Always appreciate you guys listening. And as Austin said, reach out to us if you have any questions.
Awesome. All right, everybody. We'll see you next week, every Wednesday, 12 o'clock. Thanks.